Now, secondary markets are the talk of a lot of people here at this conference. They, of course, let investors trade shares of private venture-backed companies like Facebook and Twitter and Groupon, whose valuations have the attention of so many people and so many investors here. And now the SEC is taking a closer look. Now, SecondMarket Holdings is a company that's become one of the go-to brokers in this growing market. And CEO Barry Silbert even found himself on the cover of the current issue of Bloomberg Markets magazine. Barry joins me now here at the conference. Glad to have you. Always glad to talk to you.
Good to see you.
You guys are getting a lot of attention, maybe some of it unwelcome, but a lot of attention. And you know, here at a conference with the likes of Jeffrey Immelt of GE, they want to have you on a panel talking about what's going on in secondary markets. Why are secondary markets of such great interest to so many big thinkers in the world of economy and thinking? People usually think about different subjects.
People have finally realized that the IPO market has been dying a slow death over the past 10 years. Back in the 80s and 90s, 400, 500, 600 IPOs per year. Past decade, 100, 150 tops.
If. I think 85 last year, venture-backed companies.
Right. And so what's happening is that there's this new need for a new growth market to enable companies to grow to the point where they can go public if they want to, or choose to stay private if they choose to.
I think one of the concerns seems to be that it's a market that's kind of crept up out of nowhere instead of a market that was created by legislation or by the powers that be. But now you, sir, have become so powerful.
Well, that's how markets do get created. They don't get created by government. They get created by entrepreneurs. And over the past couple of years, we've seen the volumes really explode. But still, last year, we traded about maybe $400 million in private company stock, which is up 4 times the year before. But still, it's very small, It's nascent, but it's growing very quickly.
And trading by appointment, really, still.
Well, our model is very, very unique. So the idea is we're trying to create a new market structure where the market conforms to the company versus the company conforming to the market. And what I mean by that is the companies, when they choose to trade on second markets, they're deciding when the market's open. Is it a once-a-year auction, or is it open for 1 week a year? They decide who the buyers are, they decide who the sellers are, and they decide how much information they want to share. So it's not forcing companies to basically be publicly traded 24/7 or 9:30 to 4. It's creating a market that works for them.
The whole thing, though, rests on the notion that investors in this market are accredited investors, but more to the point, they are sophisticated investors. They know what they're doing. But those rules are, there's a lot of, by that rule, there are a lot of unsophisticated people who are accredited as, or accredited investors and become sophisticated investors.
Well, so we don't make the rules on what the SEC defines as a sophisticated investor, but as you mentioned, it's an accredited investor, which is $1 million in net worth or $200,000 in income. We would love to see more participants in this market as buyers, but the rule is limited just accredited.
Well, but what are you going to do when you get a company? I mean, a lot of companies would like to close down trading, would like to choose when their stocks can trade on the days when they've got bad news out. When you start to get companies of a different stripe, bad companies, crooks, the stock frauds, that are always a part of public markets, and there's no regulation around that, making the market be open for them, then what do you do?
That's so far down the road for second market, I think. I mean, we've had about 50 companies trade. There are 3,000 companies that are funded by venture capital firms each year. 50 companies have traded on second market. It's growing very, very quickly, but we have the opportunity to be very selective on which companies trade. So these are companies that have taken a number of rounds of venture capital. They have their audited financials from a big 4 accounting firm. So we have the ability to be very, very selective at this early stage. Now, granted, the public markets have plenty of frauds and kind of bad actors.
I mean, Warren Buffett's thing is, start off with innovators, then you go to imitators, then you go to idiots. Somewhere in that imitator and idiot phrase are the stock frauds. And it seems to me that your kind of market is going to be susceptible to those kinds of...
So we're very, very sensitive, of course, down the road to facing those types of issues. But that's not a reason for this market to not exist. There's such a need for a new market to enable companies to grow, access capital, get liquidity back to their shareholders, that something has to be created, because I think the public markets are broken for smaller cap companies right now.
Now, Facebook is a big, what percentage of your shares traded were Facebook?
Last year it was about 35, 38%.
So what happens when that goes away? When Facebook goes public, you guys are, without a leg to stand on, or one fewer leg to stand on.
Fortunately, there are some great companies in the U.S. that are growing very, very quickly. Facebook is a very unique situation. There'll be about one of those, I guess, a decade. But there are, like I said, 3,000 venture-backed companies per year get funded. We've got an enormous pipeline of companies that want to trade on second market once they reach the right size.
When people, investors here, are talking about some of the things that they're not able to do in your market is short stocks, which can help not suppress valuations so much as offer a different way to trade as stocks and a different way for people to hedge their bets. Is that something we could see someday in your market?
I would suspect that someday down the road, derivatives will become an important part of this market, like all markets, but that's pretty far down the road, because the way that prices typically get discovered on second market, it's an auction. It's a sealed bid Dutch auction. So what you have is you have buyers and sellers putting in orders, and the market clears that at a specific price. So from that perspective, it's not a market that needs supply pressure to kind of push down the price from short sellers.
But the notion of a short sale as a derivative contract is barely a derivative contract. It's an individual equity trade of the same size that the trade might be going on the other side of the deal.
Right. So we're creating a market that works for the companies, it works for the investors, and you talk to many companies out there who no longer view going public as the pinnacle of success. They don't want to deal with Sarbanes-Oxley. They don't want to deal with short sellers.
You really don't think that entrepreneurs growing up in Silicon Valley say, someday I'm going to have my own IPO? You think they're going to say, someday I'm going to have a secondary market for my stock that's kind of liquid?
Well, I've done a very unscientific study. I asked many public company CEOs who've done both public and private if they would ever go public again. 9 out of 10, it's probably 10 out of 10, I'm sure there's someone out there, 9 out of 10 say, I will never do this again. I would choose to stay private if I could, so I don't have to deal with a lot of the negatives of being a public company. Look, you have to deal with your managed or your value based on quarterly earnings. The average hold period in the public market in 1970 was 5 years.
Right.
Today, it's 2.8 months.
Right.
60% of trading in the public market is high frequency trading. It's computer algorithms.
Right.
So we're trying to bring back fundamental investors back into this market, slow things down, and build a market that's good for the companies and good for investors.
This debate will be forever, because I feel like the markets are for the people and the markets are for the companies, and they have goals that are sometimes at odds with each other. But interesting stuff that you're doing, and we will continue to keep an eye on it and keep the good stuff coming our way.
Thank you.
Very glad to have you, and congratulations on the magazine cover as well.